journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm posting the chart of the Dow Jones futures contract. I don't do the index itself, but I want you to see from the low back here. This was our COVID low in April of 2020. It went up for 95 weeks, and if you just move that over to where we are right now, it's 95 weeks. So it's making a new high. You can see there it is right there. If you go back to where we were way back here before we had a correction of about 25%, a little more than that, there's the ABCD pattern right there. So this is what we're looking at right now. Looks like we're going to go up forever, but sometimes forever is a good thing. I still am of the opinion that this is part of the long-term 20-week cycle or 20-month cycle that we saw here. Hold on one second. Let me get, sorry, folks. I've got a little bit of an allergy. Oh, it's the wrong one. Just a second. I'm hitting on about one cylinder, folks. I'm just really tired. Hold on one second. I'll get through this. I'm having fun. There's what I want to see. There's where I think we are. No, that's the original. I want to do the one that I did the work on. Okay, there's 1929. I think what we're looking at is a 29 top. I'm a week off, 2 weeks, I don't know, 3 weeks, but it's coming. And you can see how the transportations followed along in 29 this year. They're far, far behind. There was our 3 drive to a bottom there on July the 8th at 42 in the Dow Jones. Took 27 years to get above that high. Also, folks, keep in mind that sometimes this stuff does work. This is something that Jeff Huge gave us yesterday. Stan Harley will be our guest today. Now at 12:30, 1:30. Okay, you can see here. This is the bullish advisor. We're at all-time highs as they should be. The bearish advisors, the all-time low as they should be. You can see how these invert at certain times. Doesn't always work. Sometimes they go up forever. So this is about the highest we've ever been in a long time. This was July 2nd, and here we are on the 12th. I do not believe this is a breakout move to the upside, but like I say, I've been wrong many times. One of my good friends is, he's a friend, he's a good friend, I guess. Burt Doman of Wellington Capital. You'll see here, he's seeing the largest gap we've ever seen between in other words, taking out these cap stocks, these high price stocks in the S&P, and look at them on a regular basis, you see there's a big difference between what's really going on in these markets. We see this in new highs to new lows also, but that doesn't mean anything. That means it can still go down. Now, another gentleman who was kind enough to send me a chart said he showed me the 2020 level. This is where we came down into COVID. As you can see, the Dow Jones was making a more or less a 3 head and shoulders, but now we're making a 3 drive to a top pattern, folks. Here's where we are in the Dow Jones. We've made new highs. We've taken all these out, and we did it today. I mean, we had a bearish report. It was down 100 points and then rallied 500 points. So the market's bullish. People are buying it. You can't do anything about it. But keep in mind, folks, this is the Bradley model from 1929. You see it was off by a little bit, and the market went down quite a bit. And the Bradley model for this year, I believe, that's the same one. I can't find the other one. Here it is, right here. Hold on a second. There's where we are right now into July. And this has got a bearish bias in here for a while, but it ain't showing up yet. But that's the name of the tune, as they say in the trade. Also, I wanted to remind you of the fact that back here on August the 8th, 1974, that was a top in my trading account, folks, right there. 28th of July was a top. This was August the 8th. And at that point, I gave a little bit more than 50%, plus 50. You see, we dropped 50% from the time he resigned until December the 6th, when we had that big multiple conjunction of a whole bunch of planets making a 3 drive to a bottom pattern here on the downside. Okay, that's the main thing I'm bringing you up to date on. That's as I see it. I'm not buying this breakout. Well, why would I buy the breakout? I didn't think of it. I thought I was making a top before. I'm certainly not going to buy the breakout. I'll get back to my moving average program in a little bit. Maybe that'll kick in and we'll be able to, I'm a short-term trader, folks. When I look at these patterns, I have to tell you what I see. That's pretty much. Here's what I wanted to show you what happened yesterday. Very unusual event in the Russell, folks. The Russell, folks, ran 3 standard deviations, folks. This is a market crash. Only it's upside down. It's buying. And we went up and we hit another big number today at 21,088. It was a 1.618 expansion. But, the Russell is still not making new highs. It made its high 3.5 years ago, 2021. So this is the fact that we saw this was equivalent to 250 handles in the S&P, folks. That's what a monster move it was. In the NASDAQ, I want you to see the top line up here was 1 standard deviation, okay? 2 standard deviations would have been down here. All we've been able to do so far on this was to rally up just about to the 50% level, but it's still early. We got 2 hours to go, actually 3 hours to go, and it's still growing strong, so I wouldn't worry too much about it. But I believe that we are at a point where I'm certainly, I took a loss on that NASDAQ. It looked beautiful on Monday morning and Monday evening. It didn't look good, and I said, that's it. I've been following along. We had that big break yesterday, and the S&P rallied back 78%. Let me see. I think that's where we did it. Let's get this up here. And see, it's already gone above the 78% level in the S&P here. So we hit it once, backed off, and there it is again. This was the high. We dropped 90 handles, and boom, we're back. This market is not acting bearish right now, folks, so you can't sell it short. That's the bottom line of what we're paying attention to here today. You may be able to sell it short on Monday, but it'll probably be at a happier Sorry, folks, at a higher price, okay? So there's where we're watching here. I'll blow this up. This is a weekly chart. You can see there's where we're watching this particular pattern unfold here. See what that number is. I think we're close to, no, it's up a little higher at those, another 250 points in the Dow, which could make that, much, much easier, okay? All right, now let's move on to another thing that we had going on today. Remember, Stan Harley will be our guest. I think we have a break. At least I hope we do here. 48 more 48 more seconds. We'll have a little break here. Remember, folks, live every day in an attitude of gratitude and, be happy. Okay, let's move on here. I'm going to take take a deep breath, have a glass of water, and I'll see you in a couple minutes, okay? We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to go over a trade that we did on the live trading today. This was the Russell 2000, and of course it had that extremely big move, 3 standard deviations, but we were setting right at we took out these old highs. We were setting at a 1.618 expansion at 2180 right over here. You see it's trading at 2170 now. So we sold it at 2180, and I only risked 4 points, which was $200. It went to 86, and then it backed off, quite a bit. But that's what we were watching. See, we were selling right up in here. We'll just get this out of the way. Our level we were selling at was right there at 80. That's where we were selling, right there. Went to here, and then it's backed off, but that doesn't mean very much. It's the fact that we had this big move, which was important. One other thing I wanted to point out to you that when we were doing the trading today, we saw this big low here in the NASDAQ where we took out the previous day's low by quite a bit. You'll see, took out that previous day's low by quite a bit, and then we had the rally up. Well, when we had the big move up here, I said you got to look for 382 retracements. So the first one that we looked for was right here, and you'll see that didn't make it at all. But on the second 382 retracement, which was right here, it went exactly to it, and that led to this topping zone that we're looking at in here, and this pullback right here. Let's see if it's correct, and we'll see if that's going to be a 382 of the low we made way back here, and it certainly might be. Looks like it's close, boys and girls. But it doesn't get any cigar here because we were looking for it to come to 205.40, and it got to 205.54, so it missed it by a couple $100. But it was close enough for government work if you trade that way. But we don't. We like to be a little bit more accurate in that. The other one that's looking pretty good, this was the gold market. Now, because we started a little bit late, we started right here, okay? This was the move down right here. There was your beautiful A, B, C, D right at the report. Then you have the run up, but this is where the pedal met the metal. This was just an 8-minute chart. We were watching a 4-minute chart here, and you'll be able to see it here pretty soon. There it was right there. There was your bottom. There was your 382. I'll clean it up so you'll be able to see it. And this is what we were watching, and it did exactly what we thought it was going to do. And of course, it had a nice move to the upside. So anyway, those are just a few of the things that we're paying attention to here today. The currency markets are really going wacko, folks. I want to show you something here that we're seeing here in the British pound. This is the, everything's copacetic over there. Everything's wonderful. So it looks like it's going to go higher yet. We're almost at a 1.618 expansion of this move right in here. We've been going up nonstop now since Richie Sunak gave up the ship, which was a few days ago. You see, for the last 10 days, it's been just basically straight up with no corrections at all. Now, there was a good buy right here, friendly hello and a good buy right there down here at 123. But let's look at the euro. Just 1 second here, just right above it here. And you'll see that it's also moving higher. And we're almost to this level right up in here, taking out this level right here, which if it does, notice how it gapped up today, folks. You don't see a gap up in foreign currency very often. And there was one today. And they assumed whatever was related to whatever it could be. It could be anything. I don't know. Wars. Got so much stuff out there, you don't even think. God, I'm not a fundamentalist. But anyway, that's what the currency looks like here. And there was our 78% level down in here, which was such a good buy. Big ABCD. Now we had this run up. And the last one we want to look at is the Japanese yen. And that has had a little bit of a correction, but not very much. Here it is right here. Yeah, see, there is a daily on it. Let's get this up here. That's the euro yen. Sorry, boys and girls. Just a second here. The chubby little fingers are not running the way I want them to. And I don't have the Japanese yen in here. They've done a lot with my data to try to get it better, but it's just not. I've got to get that put in. I'm sorry I don't have it. Not much I can do about that. So let's move on here. As you can hear, I'm stalling until Jeff comes on. Hold on 1 second here. Move this out of the way. Get the British pound out of the way. The other one should be interesting would be the Canadian dollar because they're beating up the grain so far. I think they're going to, I don't even think I have the Canadian. Well, I'm missing a lot. Oh, no, here it is. Here's a Canadian dollar. See, this problem that I've been having with data I thought was related to what's going on. Let me just show you what I mean here. You see this part of the data in here? I haven't looked at this for quite some time here, but there was your 382 here on the Australian dollar. We've been going up ever since, but this was been my problem. They fixed it, and I haven't refreshed, so I'm going to do that right now. And now you see it's all refreshed. Now we're coming up here to this level. I mean, we get much above here, folks. We'll be looking at one heck of a move. Look how much the Australian dollar's been down in the last 5 years. Used to be 180. Now it's at 167. You know, they're beating it up. Anyway, pretty good. Anyway, that's what we're paying attention to here with this Australian dollar. Okay, now someone asked a question about you know what, folks. We don't want to miss Mr. Appel, who's down by the wells, and we'll also do our good friend Mr. I won't be able to do the MAGAs because we got Jeff coming up, but actually it looked like we had a down day for a second and then it's bounced back again, so still going higher. We had a little bit of a pullback here, still going higher. Most like everything else, probably even Tesla. And we'll get Tesla up here and we'll take a quick look at it right here. We'll be looking at it. There we go. And it's sold off, but look, it's come right back. It wasn't down very long, was it? How much did it go down? It was down, went from 270 down to 230, tried to fill this little gap, and look where it's at today. Rally another $15. No bears on Wall Street today, boys and girls. No bears on Wall Street. Maybe you'll never see another one. Who knows? Anyway, we have another 2 minutes to go, and I'll try to look at something about silver. Silver, several people have asked about that in emails here. Let's get it up here. And, oh boy, okay. Here's silver for today. There's the same data problem. See, we're finally getting it fixed. I think so. Let's move to the hourly because we were sort of bullish on it. See, it had a pullback this morning. As you can see here, what we wanted to do was to get this pullback to come right to there. There's what we were watching from the low to the high. Was as nice as an elephant's eye, and it goes to 370. And look where it is right now. We rallied all the way up to almost $1. We got the gold. We missed this one here. But I didn't even. I mean, that's just. It's really a 382, folks. In bull markets, you've got to go back to these old lows and see where they are. They're just phenomenal. They certainly are. Okay, thanks for putting up with me. I've got a couple more minutes to go, or seconds. I'm not sure what it is. 53 seconds. Would like to say, do something nice for your neighbors. And Jeff Hughes is going to be coming up here in just a minute. And hold on to your seatbelts, folks, because what you're seeing now is just the beginning. We're going to see volatility that is going to be unbelievable, and I can tell you with a great deal of currents of I'm not even sure what I'm going to do. All right, stay tuned for Jeff Hughes. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and Jeff is tied up. I guess they've got him tied up in the bear pit like most of the bears. I gave up. Fact is, I thought today was a possibility of just a 382 rally, which certainly wasn't. The key was the big explosive move in the Dow Jones today, and yesterday it was in the Russell. That move yesterday in the Russell, folks, was something for the ages. The only time that's only happened with 3 standard deviations, only 3 times in the history of the trading of that index. And each time after that, there was a sell-off. Of course, the sell-off back in those days probably was more than 2 days. Here it would probably only be 2 days. Here's the weekly soybean chart for November. You can see we got a whole bunch of stuff coming down here. And what we were doing today in the room, we were going to get this and take a look at it. We were watching this last little pattern. As you can see here, it measures down to this level. What we were trying to do is to see what the 1.618 expansion would be on this, okay? And you'll see it comes in right here at 56. You know what? I don't think I'm getting data. Bear with me here 1 second, folks. Refresh today. Yeah, see how there it is right there. It's now finally refreshed. Shut the front door and raise the rent. Let me get up here and look at it. There was the 1.618 expansion right here. I said it'd probably be a good buy here at 10.55. We got down to 1060. We're still at 1067. This is the weekly. Now we look at this on the daily chart. You'll see here that we did get, this is November at $11 a bushel. And I'm not even sure. Let me see the 8th, 12th. No data. See, I'm not getting data. Shut the front door again. Oh, man. Maybe it'll, yeah. Now they put the data in. And I'm not even sure this is right, folks. This is one of the problems that I had today earlier in the morning was the data was messed up. I'm really working hard to get it right, but I don't know what it is. I've not had data problems before, and the guy that, always had my back on that was Mr. Twentyman. By golly, just not so much anymore. So anyway, this is no good. So let me try something. Well, I'm just wasting time doing that. So let's get up here and take a look at something that I do know, which is soybean oil. I'm still wildly bullish on this, folks. This is the only one that's held up during all this time. This last pull, we had a move up here that matched these highs, triple highs. Okay, that sold off about 3 cents, about $1,200, and the pullback thus far. Get this here right now, and you'll see. There's where we are, right there, hit the 50% level. But the rally back today, see this rally back was nothing more than a 382. This is a 3-day rally at a 382 is what that is. So that's not bullish. And if you look at this on a smaller time frame, you'll see there's probably an ABCD here somewhere. And I'm sure you'll find it. And there it is right there, ABCD, right up here at the old 382. You'll see it again. Hold on. And this market still hasn't taken anything out. Like this, we went a tiny bit above the 382, just about $100, and now we're heading down. As you can see here, looks like we're moving lower again. So not yet, but maybe someday. These things usually bottom in July, and boy, the weather's nice. It's the greenhouse effect, but the hedge funds are just piling on shorts, and the poor farmer, well, he hedges his crops most of the time, so we're going to be taking a look at that. Okay, now the problem is this is August oil, and I'm looking at December oil, so let me get that one up here right now. And here we go. There's the December oil, a lot different here, but it's the same thing. You have the high up here. You take out the previous day's high by just a tick, and where'd you do it at? Exactly at 382. This market is still bearish. Probably it's going to do this. There's your AB leg. Come down and make a double bottom down in here, or maybe it's 786 or something. But look at this on the smaller time frame. You'll see it. There's your ABCD pattern right there. There's your 382. So there's nothing to say, but it's still heading lower. That's really in the stocks. They're still heading higher. What else you can do? Okay. Now here is the soybean meal. This is Christmas soybean meal. It's trying to make a bottom. It hasn't fallen apart like the rest of it. Now remember, this is all the protein stuff, folks. This is just a 13-minute chart. We've made new lows here from the previous swing back in here. Looking at this on the daily basis, it had a tiny bit of a rally today of, basically nothing. Let me just get up here and show you. It's still going lower, actually. See, there was the rallied $400. That's nothing in the meal, and then it come back down again, so it's doing very little. And looking at this on the daily, it's broken all support down in here. So the only thing to look at it for would be down here. About another $11 would be at the 1.618 expansion of this whole swing to the downside. Well, 127 didn't hold it, that's for sure. And so this is probably not going to hold either. That's why I haven't been making any recommendations in the grains. They just keep going lower. So, but I did make a recommendation to go short the NASDAQ on Monday, and it looked like it was going to be a good one. But boy, Monday afternoon, Tuesday morning, it was certainly wrong, and just continues to go higher. All right, let's take a look at the wheat. This is one that we did do today. Well, we did December. We did September wheat is what we did. And we had this move right here, and it had a little bit of a bounce in here. But we bought it here we bought September wheat. Sorry, folks, just a second. Because September's the lead month. Just give me a second here, and we'll bring it up here with a 3-minute. And yes, we bought this at 50. Hold on just a minute here. We bought this before the report. We bought it. We broke even. What we did is we didn't want to carry it into the report, so we bought it there. And when we broke even because I didn't want to go to the report, and that would have stopped us out. It's silly to go into report. Just can't do it. And so it all went back, and then it rallied, 12 cents, which is nothing, and still going lower. As a matter of fact, wouldn't this be funny if that was a 382 of the high we made on the 11th? Yeah, that is really funny. Look at that, folks. 382 the previous day. That tells you whether the market's going up or down. That's what you're looking at. Hey, I think we got a break coming up, don't we? No, 52 more seconds, and then we're going to look at some currencies for sure. Some besides the euro and the dollar index. We need to look at the Canadian dollar, of course, and that's the main one that we want. I can't look at the Japanese yen because the data is corrupt, and we'll find out if I get that fixed tomorrow, but that's what we're paying attention to here. So far, that's it. So we'll take a break now, and I'll be back with you in just a second.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the weekly chart of Google. Now, you notice all these numbers over here. That's just the program for what they call Pesavento patterns in Ensign. I'm just going to show you what you can do because this is too sensitive. I'll just get rid of this. Now, watch. What I'm going to do now here is I'm going to show you how you... they did it automatically for me. Oh, shucks. Anyway, what it does is you just touch this, and it'll give you another swings and stuff. You can start... seeing other swings, but it's set automatically. But anyway, let's look at the MAGA stocks. Get rid of this. Okay, this is one of the reasons I assumed that we were making a major high. There's Google. It still hasn't taken out the high. 195, you can see the high was 193.31. So there's the 1.6 was right there on the money. Now we're going to take a look at NVIDIA. And NVIDIA, even though the market's going straight up, it's not doing a lot today. It's just hanging in there. Made a little ABCD here yesterday right at the 786 and still going higher right now. Here is Meta. Oh, that's even backed off a little bit. That made a new high, and it's coming down a little bit more. I don't know whether it's up or down. It's probably up. Let's double check if I can refresh the data because that shouldn't have left a... Wow, it left a gap this morning. Gap down in Meta? Boy, wow. Surprised that happened. Okay, here is Amazon. This is a weekly. Let's move that up. You'll be able to see it. Here's Amazon, the weekly. Oh, man, hold on. There's your ABCD measures to 199. The high was 199.84. It was supposed to be 199.91. We're at 195 now, so it'll probably make it here in a little bit. Here we have the semiconductors. This is old superconductors here, super micro ATF. Get this up here. It's also haven't made new highs as of yet, but it's still holding its own on the upside. And then here is Tesla, which we've already looked at. Here is Apple. We've already looked at that. No, we don't know. We did on the other one. Hold on a second. You can see it's still going higher and higher and higher. So how much higher it can go? Anybody's guess. I don't even know if weekly because of all the splits. Yeah, there it is. There it is right there, Apple. If this were to do an ABCD, and it might, there's your A leg right here. There's your B leg right there. There's your CD leg right there. That comes in at 37, and we're at 32 right now, so pay attention to that one. That might be a real interesting one to pay attention to. Here's Softy. I think it's going up again. No, it's actually, this is the weekly. Okay. The weekly target on this measured to 462. The high was 467. We're at 454 right now. And then Broadcom, it's had a little break. We rallied up to the 78% level here yesterday. So there's a big difference in these. So there's a lot of stocks that have not been been doing very well. It must be moving the market. In other words, people are finally saying, well, we've got to do that. One of the reasons was the Russell. That Russell, I wasn't even watching the Russell yesterday, folks. I hardly ever do. I don't even keep it on my watch list very much. But when I looked at it at the end of the day, I said, holy moly, guacamole, let's get this up here, because this has been one heck of a move here. Oh, this is a bad tick. Let me get rid of this. Hopefully that'll do it. Yeah, there it is. See, there was the move here. Right there, you see that? That's when the report came out, but that's when all hell broke loose, because there was your, get this up here so you can see it a little bit better. See, we were in a downtrend, but when that broke that out, look at this. This is, they really, the option traders got absolutely creamed on this, folks, because I showed you 1, 2, 3 standard deviations, and that's what pretty much has been happening to it. Let's do the 4-hour. Maybe we can. No, that's that same bad tick. Let me try to get rid of it. Probably can't. It actually worked. Yeah, there's where we were, and then of course we had the big move up, and we'll find out where we're going to go. Remember on the long-term weekly. Remember, this is still just taking out the highs of April is all it's doing so far. Well, it's not unusual, but if you looked at this a little bit closer, you'll see that you do have a ABCD here from the previous weeks. Oh, that's actually a 3-drive pattern. Shut the front door. Well, this means wait and you'll get another buying opportunity. Hold on, there's your ABCD, and yeah, it's going to be pretty close up here to a perfect ABCD. Let's do the old ABCD pattern thing in here, and we'll take a look at it. There's your AB leg right there. And your CD leg comes in here at 2185. Oh, that didn't work. The high was 2186.40. So pretty close. We're going to find out if it's going to mean anything with that. So I've covered all of those. Now I want to get back. Hold on one second. I want to do a thing on crude oil for us, because gold and crude. So give me 1 second. We'll open this up and then we'll take a quick look at it. Okay, this is finished. I'll do the metals here because we've. This will reiterate the problem that I've had in data here the last few days. You see, it's not been refreshed. I'm going to refresh it now. See, so this is now, it still didn't refresh, so forget that. All right, I'll do that anyway. Here's the crude oil. This was the pattern that we were looking at today, of course, the beautiful ABCD with squaring and everything that we'd like to see. Oh, what's this about? I don't know. It's a spam merino. We're going to not do anything with the spam merino. All right, now let's look at there's the crude oil. We've already talked about that. I want to look GDX. That's breaking out to the upside on the weekly. Silver. Now, I've already talked to you about that. We've already looked at the silver one. Here is the gasoline. Look how bullish gasoline is, folks. I mean, this thing won't back off at all. I mean, it's had a huge run all the way up. Now, we had a little bit of action here on the hourly chart, over here. Data's wrong. See, look at this. The data's wrong. This is July. Wow. I don't know what the problem is, but I'm telling you, the data is, I'm having trouble. Well, now it's bothering me in the, all this data is bad. Now, this says, I don't think this is stop trading. Maybe it's July. Oh, that's probably what it is. Yeah, it's because July has gone off the board. Let's just take a quick look at this. I'm hitting on about 1.5 cylinders, but we'll be okay here in a minute because I'll be at the end of the week. Hold on 1 second. Get the heating oil right here. And that's it right here. There's a spot month. Spot month is moving. Yep, there we go. Spot month would have had the same sale that we had in crude oil. There's your A, B, C, D pattern right here. Just spot on, and then it backed off a little bit, and that's what it is. It's the fact that these July contracts seem to be out of date, and that means that I've got to come in here and look at this RB. Okay, there's gasoline. It was high for a while, but then you'll see here just a few days ago, and today what we go to 382 is what it'll do. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I see we reached almost to 40,750. We're only 200 points away with 2 hours to go. We should be able to make that. Hold on 1 second here. See what's moving on here. Oh, my chart went down. Hold on just a minute. Nothing surprises me anymore. Hold on just a second, folks. Get this up here. Sorry about that. Okay, here, as you can see, we're almost up to this level here in that Dow Jones that we were looking at a little while ago on the daily. They're almost there. We're just about, it says, we're 300 points away. 408.69 is the big ABCD on this. What I want to be able to see is when I check the actual Dow Jones index itself, because the futures have been in a huge premium to that, and but it doesn't make any difference, folks. This thing looks like it's going to go at least to those levels. Look where we are in the S&P, folks. We were down. Look at this. You talk about volatility. Get ready for it, folks. This is just the beginning. Down 100 handles, up 100 handles. Get ready. I mean, it's going to be a big party in River City when it's finally over, and I know how it ends. I'll be there when the fat lady. Oh, No, I'll be there when the ladies from the health club are singing. That's what I want to be doing, okay? But we'll see. No 382 here at all. Just boom. This move here was so quick. This is when the Dow hit 40,000. Now it's rallied 500 points. And anyway, that's what I'm paying attention to here today. Be a raucous week next week. So just keep buying, because keep buying until it stops going up. And when that is, I don't know, but we're not very far away. The old high was at, we just did it. We just took out the highs of Thursday in a matter. We're 100 points down and 100 points up. You can't beat only in America. Live every day in an attitude of gratitude, and may God bless.